Hola traders, this is Blake Morrow with ForexAnalytix. Did I just say hola? I did. I think it's because I was in Mexico last week. Anyway, this is the week ahead video for June 4th, 2017, and I want to welcome you guys and gals to today's video. Now, before we get started, I have to throw out there, look, if you haven't tried out ForexAnalytix and what we do, make sure you take advantage of our trial. It's only $1 for 10 days. You can, when you do that, go ahead and download the mobile app immediately. Get it from the App Store, Google Play Store, and this way you have all of our analysis and updates coming to you via your mobile device. Because as much as I'd like to believe that we're all in front of our computers all the time, that's realistically not life. So make sure you get the app when you start our trial. All right, and then you can see how much you just love the ForexAnalytix platform and what we do. All right, well, with that being said, let's get that out of the way and let's talk about this next week that we've got coming up, and just some things that, in my opinion, should be viewed going into this next week. Now, I want to start off by talking about the dollar. The dollar really, closed at its lowest levels of this week, and the dollar looks bearish. The fact of the matter is that the DSI, or the daily sentiment index, is extremely low. It's at a reading of 10 right now on the dollar, which is a very historically low reading, and it's a contrarian indicator too. So when it's down at these levels, you've got to be careful. You've got to be careful getting too aggressively short the dollar, because that contrarian indication might suggest that the dollar could bounce. But technically, I mean, if you look at the dollar, it looks bearish. I mean, we got this bear flag formation that you see here. We've broken through a lot of support in the dollar index, and really, if you go over to the euro dollar, the euro dollar is coming into some really key resistance as well. You can see that the euro dollar is approaching that spike high from, this is the election night here in the United States, and that comes in right around 113, just a little above 113. Relative strength isn't quite overbought, divergent as we hit new highs. You can see as we hit new highs in price, relative strength is divergent, it's not hitting highs. However, that doesn't mean that we can't go higher, and if you notice, that resistance right there is so close, and we have the inverted head and shoulder pattern completion here coming up, and on top of that, if you go look at the weekly chart, we've got channel resistance coming in at 114. So the beginning of the week might show some dollar weakness, but the question is, or some euro strength, but the question is, how much further can we go? The euro reading on DSI, you can see, is also here. Let me pull it up. I believe I have the chart. Oh, I have to go over to basic technical. Here's the DSI reading, and you can see that that the euro dollar, it's at 81, and that's historically a pretty high reading as well, which suggests that you might get some euro weakness maybe as we initially break higher. I want to be extra cautious with the euro as we're approaching the completion of the head and shoulder pattern, as we're completing the channel resistance around 114. That doesn't suggest that the euro can't go higher. I mean, I look at the dollar, and the dollar looks extremely weak. I've got to take you over to a chart that we don't cover typically, but I will take you over to it anyway. This is the US dollar Swedish krona, and you'll notice that the US dollar Swedish krona broke support, and we closed at the lowest levels in really about a year, less than a year, but close to. We've closed at the lowest levels, and we've broken through multi-year trend line, and frankly, the US dollar Swedish krona looks bearish here. And that is one of those pairs that I'll focus on, or I'll look at, especially if I'm trading the euro or the cable or the Swissy. I pay attention to the Swedish krona. It tends to be like the we call it the canary in the coal mine, if you will. And so that weakness of the US dollar Swedish krona really kind of confirms the weakness that we're seeing in the dollar index in general. But You know, the dollar does look weak. I would suspect that we're getting close to a bounce. I'm not sure when that's going to happen, but it could happen soon. There also, I want to take you over to the cable. You know, this is a really big difference between what we're seeing in the euro. The euro's blasting higher, and the cable's just kind of capped. After we broke through this triangle, we've been capped by that underside of that trend line, and this is a big breakout point. Comes in at 127.75. We successfully tested it this week, but you know, if we get back below there, you know, we talked about this last week. This green channel that you see here, that might just really be in play. So if the dollar does bounce back and you start to see the euro pull back, well, the pound really could come under pressure, because if you think about the difference between the people who bought the pound the last month and the people that bought the euro the last month. I mean, the euro has really outperformed. It's gone from, you know, 109 to 112, 113, and the pound over the last month hasn't gone anywhere. And so anybody who's holding the cable right now long probably is a little concerned, especially with the elections coming up next weekend in the UK. Which ends up being, it looks like it's a much tighter race for Prime Minister May than she had originally thought. So that could weigh heavily on the pound, and then on top of that, you've got, you know, just Brexit negotiations, which is going to be complicated for the next couple of years, and maybe that really is kind of playing into the market where the pound is starting to underperform. You can actually see that in the euro pound. The euro pound looks, you know, I've been trading this to the long side myself ever since we broke this this down sloping trend line, and we closed at the highest levels that we've seen since, you know, since earlier this spring. So the euro pound looks set to move higher still, but relative strength is getting overbought. We've been more overboughter. Yeah, I made up that word. We've been more overbought in the past. So this doesn't necessarily mean we're going to stop here. We could probably match these levels that we saw in RSI, you know, back in October of last year when we were ripping higher. You know, we could probably revisit those levels in RSI, which could put us up towards 88, 89 pence before it's all said and done. But this next week's going to be really important for the cable, for the euro pound. As well. A couple other things on the radar this week. You have on Monday night, you're going to have the RBA rate decision. Now, a lot of these central bank decisions are really going to start to come in focus, because as the Fed looks to raise rates and normalize rates and policy, other central banks are probably going to be following suit, and that's, I would say, is predominantly the reason why the dollar is seeing some weakness right now, is because most investors and traders realize that other central banks are going to start to normalize policy soon. And so if we get a little bit of a hawkish spin with the RBA, you know, maybe that puts the Australian dollar a little higher. You know, the Aussie dollar has held a pretty good trend line, or close to, in what could be viewed as a bullish wedge here, and we're near the lower end of the wedge. So, you know, risk reward would favor longer term Aussie bulls at the moment. You know, if we get below like 73 cents, that would be very bearish for the Aussie. But for right now, we're only trading at 74.50 basically, and the upper end of this wedge comes in around 77.50, 78 cents. So, you know, risk reward favors longs. You know, and if the RBA comes in a little bit more hawkish, I doubt they're going to raise rates. They're not expected to. But, you know, we have GDP on Tuesday out of Australia. If numbers come in a little bit better than expected, that might turn the Aussie higher a little bit. Also, keep in mind that Chinese data has been relatively weak. That's one of the things that's been keeping the Aussie dollar under pressure, iron ore prices as well. We also have this week, we have the ECB. So if the ECB starts to signal that they may look to taper, you know, some of their purchases, that could put the euro dollar, you know, back up, as we were talking earlier, back up towards that 114 level as well. Remember, the dollar is, generally speaking, pretty weak at this moment. One of the other things that I wanted to speak about is the Canadian dollar. The dollar Canadian, you know, this currency pair has been really weak, and we do have Canadian employment at the end of this next week, so that's why I kind of want to focus here. If you go to the longer term charts, this currency pair was breaking higher just a month ago, and record Canadian short positions via the COT data suggested that the market was getting aggressively short, and Canadian dollars, that would be long US dollar Canadian. What has happened is we've seen a really big reversal in the dollar Canadian over this last month, and I think a lot of that has to do with positioning. Positioning is one of the more important things that I think of when I'm trading the markets, especially trying to come up with a longer term theme or thesis of what I'm doing. The Canadian was aggressively, traders and institutional traders and traders in general, speculative market was very, very short the Canadian dollar, which that in turn had led to a pretty big reversal of the dollar. Now, one of the other things that you have to think about is with the US producing as much oil as we are, the correlation between crude oil and the Canadian dollar, especially with the US dollar Canadian, hasn't been as strong as we have seen in the past. And as the US presidential administration pulls out of the Paris Accord, that could mean more oil exports for the US, which could equalize that relationship a little bit more between the US dollar, Canadian dollar, and crude oil. So we might not get that old correlation that we've had in the past. But going back to this technically, what you'll notice is we fell from 138 down to 134 basically. We've only rallied and we stopped at a 38% retracement. Now, Nicola Duke, who's does predominantly the harmonic patterns and analysis for ForexAnalytix, she pointed out that because of this 38% retracement here, we could have an A, B, C, possibly D move that would take us below 132. So what I'm going to be looking at the Canadian, for the dollar Canadian, considering that the US dollar is still very weak, is if we do break this 134.30, 134 support, this trend line support, that should open a trap door for the US dollar Canadian back down towards 132, and that's what I'm focused on with the dollar Canadian. I had made notes late last week as I came home from my my trip to Cancun, Mexico. I had it written in my notes that I wanted to short the dollar Canadian. I did not. Unfortunately, I did not take advantage of that on Friday, which that's what I wanted to do. I was focused elsewhere on the Swedish krona actually, but the dollar Canadian does look weak, and it looks possible that we could break through this trendline support going into next week, at least test it, and that's going to be an important test for the dollar Canadian bulls, I think. Well, folks, this has been your week ahead video for June 4th, 2017. I'm so glad that you guys listened in today. And remember, listen in next week for the next week's video, and make sure you try ForexAnalytix. Have a great trading week. Thanks for listening in. We'll talk to you soon.